Welcome back. Exxon Mobil Chairman and CEO Rex Tillerson told me today that his company plans to begin more than 20 new global projects in the next 3 years. Investments expected to add 1 million barrels of oil a day to the company's volume. At an analyst meeting here at the New York Stock Exchange, the CEO of the largest oil company said he would spend $20 billion to do so. The comment sent the stock up. As you can see, it finished at $71.57, up nearly 1%. Mr. Tillerson downplayed worries about oil shortages around the world. After speaking with Wall Street, Mr. Tillerson sat down with me, and I began by asking him to highlight what he told analysts in a First on CNBC interview.
Well, we talked a lot about our investment portfolio opportunity. We talked a lot about what sets Exxon Mobil apart from our competition as we look at any number of metrics. But in particular, if you just want to look at the financial metrics, the gap between Exxon Mobil's performance and most of our competitors has been growing for some time, and 2006 was a continuation of that gap in terms of performance for Exxon Mobil over others. So we talked a lot about why that occurs, how we've been able to make that happen, and what the future holds in terms of our ability to continue to provide the kind of shareholder returns that we have been able to provide.
Let me ask you a little about how things have changed over the last 2 years or so for your company and in fact, your entire industry. It does seem that governments around the world have become more hostile toward American or foreign oil companies. You've got, handing over production in Venezuela to the government. You've got Russia not wanting Exxon or anybody else, frankly, owning leases there. Even in this country, you've got some challenges. So tell me how you're dealing with a new world in terms of challenging governments.
Well, I think in terms of our dealing with governments in today's environment, it places even a higher premium on the kind of value that a company like Exxon Mobil brings to those countries as they consider ways to develop their natural resources. Obviously, they have a lot of choices available to them, and at this kind of a price environment, oftentimes some choices may look more attractive than they would in a different price environment. So we make the case around our technology, our project execution know-how, our cost structure, and creating more value for the country out of their natural resources over the life of that resource than others are able to bring. And that has to be viewed then against offsetting perhaps the effects of today's high prices, that they're thinking about the long term, what is this resource really going to provide for our country and for the people of that country over 30, 40, 50 years.
Yeah, but isn't the bottom line at the end of the day, it is getting tougher to expand production for oil and gas around the world?
Well, it's never been easy to expand production for oil and natural gas.
Is it peaking?
And no, I don't think, not only do I not think, I know oil production is not peaking. It continues to grow every year, year on year. And the question around the peak oil question, and are we going to peak in oil, I think you look at the fundamentals in terms of the first question is, well, do you have enough resource base? Does the globe have enough oil and natural gas still in the ground? And the answer to that question is clearly there is. The current resource assessment by the U.S. Geological Survey is about 3 trillion barrels of conventional oil in the ground, about another 1 trillion barrels of unconventional oil, heavy oil, oil sands, those types of resources. In the entire history of human consumption of oil, we've only consumed 1 trillion. So there's a lot of oil capacity that's in the ground. The real question is not, is there adequate resource, but are we going to be given access to that resource to develop it and deliver it as people need it, as economies need it to meet the growing demand?
You have been talking about that and talking like that for a while now. You were on the Today Show last year, and you said something similar. People wonder what kind of data you're looking at. Other people feel like maybe we are approaching a peak. Listen to what you said to Matt Lauer on the Today Show last year.
No, we're not going to run out of oil any time in my lifetime or yours. The resource base of the globe is enormous and can support the current demand and can support the future economic growth as well.
If that's the case, why are we looking at $61, $62 oil right now?
Well, it goes back to what I said. It's one thing when the oil's in the ground. The oil in the ground doesn't alleviate the high prices. You have to be able to produce the oil. And that means giving companies like Exxon Mobil and others in the industry access to those resource opportunities. We've got to bring the technology to bear. We have to bring the investment dollars to bear. And we have to bring the development know-how and operating capacity to bear on the resource itself.
So are you expecting the new Democratic Congress to give you the go-ahead to drill in some of the areas that have been closed off to you in the past?
Well, I'm not optimistic that the new Democratic-controlled Congress is going to give us access, and that's not been the political history in the past. But that doesn't mean we're not going to continue to visit people on the Hill and talk to them about the importance of energy security in this country. And there are various steps that could be taken to mitigate some of the energy security concerns and issues that we're dealing with today. And one of those clearly is to utilize the natural resources that this country does have available to it that we're not currently utilizing.
This leads me right to my next question, and that is how Exxon Mobil is spending its money. You've got $32.8 billion on the balance sheet, cash. People want to know what you're going to do with that money. You've been consistent in terms of dividend payouts. You've been consistent, even more so, in terms of buyback programs. Wouldn't that money be better spent drilling, trying to find oil around the world so that this idea that oil is peaking, you could quiet the critics there? Why continually buying back stock?
Well, we're investing at significantly high levels today. In 2006, we invested $20 billion back into the business. That was up 12% from 2005. And in fact, it's almost double what we were investing only 6 or 7 years ago. So we've stepped up investment significantly. The pace of that investment is driven by a whole host of factors, one of which, though, is our obligation to ensure those investments are going to perform satisfactorily for our shareholders. So we want to maintain our high standards of investment discipline, our high standards of project execution, and not erode the performance of that by taking on more than we can literally execute wisely. Just throwing money at a problem doesn't necessarily solve it. As we see opportunities that we think we can add to our current level of activity, we will add those. And we have a very robust, high level of investment activity already underway from a geographic diversity standpoint, from a technology variety standpoint. And executing that well and spending $20 billion a year is not something that you do easily.
Well, $20 billion a year sounds like a big number, no doubt about it. But is it enough for a company your size? Some people might say, sure, maybe you're getting an additional 1 million barrels a day. Is that enough relative to your decline rate?
Well, our outlook that we showed the analysts today is that we expect our volumes will continue to grow now through the end of the decade as a result of this very high level of investment activity that is ongoing. Now, in terms of the volume growth, though, is in and of itself not an objective. For us, the objective is continuing to deliver good shareholder returns, long-term shareholder value. So it all starts with the disciplined investment decisions we take, the projects we select, execute those wells, and then the result will be the volumes. To the extent we can undertake more of that activity, as I said, wisely, then we might get a different volume profile. But we don't run our business with an objective that the volumes ought to be 2 million barrels higher or 1 million barrels higher. Our objective is to run the business such that we continue to deliver good long-term shareholder value.
How many years of reserves does Exxon Mobil currently have?
Well, our proved reserves give you a reserve life of something over 14 years, and that's the highest among our competitors.
What happens after 14 years?
Well, we keep adding another set of reserves next year. We produce 1.6 billion oil equivalent barrels every year. We have more than replaced that amount now for 13 years in a row. And every year we keep moving that out, another 14, another 14. So that's the nature of this business, is keep reinvesting so you keep adding new reserves to maintain your reserve production life.
Some people might say, look, you keep buying back stock, you're shrinking the float. Why wouldn't this company be a target to go private? Look, nobody thought that TXU could go private, right? And then it was the largest LBO ever.
Well, TXU is 1/10 the market capitalization of Exxon Mobil, so it would be quite a leveraged buyout to take $440 billion private.
Yes, it would be quite the deal. Let me ask you about the competitiveness of this country. We talk a lot about the regulatory environment, whether it's the oil business or another business, and the fact that we have lost business to Hong Kong, to London. You've been focusing a lot of your energies on math, on science. Tell me where we stand in terms of competitiveness on those two fronts.
Well, there was a report issued recently by the National Academies called The Gathering Storm. And the results of that report indicated that among high school graduating seniors, and even back in our grade schools, 4th and 8th graders, that our students at those levels are not testing well in terms of math and science. If you look at the number of graduating 24-year-olds from college, we rank 16 out of 17 in terms of the number of students who graduate in science and engineering. Exxon Mobil obviously has a proprietary interest in the issue because we are a science and engineering-based company. We have 14,000 scientists and engineers that work for our corporation. But it's more fundamental than that in terms of the overall competitiveness of this country. If we do not turn this decline in the number of scientists and engineers that we are producing from our own schools, this is really going to have a long-term impact on the competitiveness of the United States, the ability of businesses to grow and innovate their business, and that innovation is going to move offshore.